What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like NVDA, Apple, AMD, Tesla, Google, and Amazon. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week we saw one of the strongest one-day sell-offs that we have seen in quite some time. So after reaching a new high for 2023, SPY was not able to hold that high, and most stocks on the market followed it down as it attempted to break the uptrend. However, the very next day we can see that buyers were quick to rescue it and they bought it back up. Now, the fact that we sold off that day created a bearish engulfing pattern. So this pattern is considered a bearish pattern, especially when it comes at the top of a trend. And this is when a day engulfs the previous day fully on a sell-off. So this candle is fully red and it's engulfing the previous day. Now, the significance of this comes from the fact that we have very strong volume equipped with that day, much stronger than the next day's buying volume. Now, this doesn't mean that the market is ready to have a full-on bearish reversal. It doesn't mean that bears are now in control, but it is something to note because oftentimes patterns, they don't follow through right away. They can take a few days before they register, and then you can see the follow through and we can start moving down. Now, we are still very much bullish on the market because of the fact that we're trading above our 10 and 20-day moving averages. The significance of these moving averages comes from the fact that we have been trading above them for the better half of 2023. So you can see that when we retested them in June, when we retested them in July, and even when we tested them back in May and April, we only moved below them slightly before buyers quickly bought us back up. Now, there are some key events happening this week, but before we jump into those events, we have to talk about what happened last week. Last week, we saw the second quarter GDP numbers, and they came in at a positive 2.4%. So this challenges the argument of a recession because all we're hearing about these days is a recession, or that's what we've heard for most of 2023. However, both quarters so far have registered a positive reading, and the definition of a recession includes two back-to-back negative readings of a GDP report. This is clearly not the case, and we saw that case to start 2022 where we saw those two negative back-to-back GDP readings, but ever since then we have been growing, which is a positive sign for our economy, and this explains why the market has reacted so positively. Besides the second quarter GDP numbers, last week the Federal Reserve also raised rates by a quarter point, which was already expected, but nonetheless, anytime the Federal Reserve speak or raise rates, the market does not know how to react. So they were still digesting the news over the next several days, which is what caused the end of week volatility that we saw last week. So coming into this week, we do have some major earnings to focus on. That's going to be from Apple and Amazon, and we're going to talk about those charts, levels, and earnings in just a little bit. But first, last thing to focus on this week is going to be our unemployment report. So unemployment has managed to stay at a historic low as the Federal Reserve have been raising rates. So everybody expected unemployment to pass 5% with the higher interest rates, but our economy and our employment has stayed resilient overall. So this is great news. Consensus for this week is 3.6%, and we are likely going to come in at 3.6%. But look out for that report because it may cause some kind of volatility in the market. So if you're swinging anything into it, you want to be careful. Now let's talk about SPY's levels before we jump into our watch list. So if you are bullish on SPY, like we said on the daily chart, SPY is still trading at a very strong bullish trend. Also on the weekly chart, so this is a time to look even further. So anytime you see weakness in a chart that you're seeing, try to zoom out a little bit and see if maybe there's a stronger trend that you're not seeing. So on the weekly chart, you can see that SPY is still seeing very strong back-to-back volume weeks. However, it is drifting a little far away from its 10 and 20-day moving averages. So anytime a stock drifts a little too far away from those points, it may need some kind of consolidation period before it pushes higher. We have been trading at a very strong high for quite some time now, so it makes sense that we need to cool down and we let the other parts of the market catch up. So while SPY has been moving closely or moving sideways, you can see that Dow has been breaking out. So Dow actually has been on a massive rally over the last several weeks, and this is all while tech stocks have been consolidating. You can see stocks like Boeing has started moving up. These are stocks that have been lagging behind the tech index, and you can see that they're starting to make their mark in the market. This is important because any sustainable bull market is not going to be sustained by just a few stocks or just one sector, which in this case would be tech. You want to see all other sectors catching up for the bull market to be sustained. Now let's talk about our watch list and talk about some levels there. We're going to start with NVIDIA, which is not expected to report earnings this week, but AMD reports earnings this week, and it's going to be on the 1st. So anytime a stock that is within the same industry or sector is reporting, you want to look out for how that stock reacts because it may influence other stocks in its industry. AMD and NVIDIA are like sister stocks, so they trade very similarly, but NVIDIA has definitely had a better year. You can see that NVIDIA is trading close to its all-time highs, and it is still trading above its 10 and 20-day moving averages. So when we saw this stock move up or gap up, we immediately wanted to apply the power earnings gap strategy. So this is when a stock gaps up and usually continues to rally over the next several weeks, several months, or even several years. This is exactly what we saw happen with Meta almost throughout this entire year. In January, it gapped up, and ever since that gap up, it has been rallying up. So although it is a slow process, this is still a very effective process because if a stock gaps up and provides strong guidance, which is something that we have been seeing throughout most of these earnings, is that companies are coming in line with expectations and they're increasing their guidance and projections. So this means that they're gonna make more money, which means they're gonna become more valuable, and naturally buyers are going to come into these stocks. So anytime you see a stock gap up, you wanna have a strong or long timeline for the stock to continue pushing up. So this is what we're expecting from NVIDIA. We are expecting the stock to continue pushing higher, and here are some levels that we're focused on and some levels that you can place on your chart. First of all, NVIDIA is trading near an all-time high, so it has a blue sky breakout set at 480.88. Now, our price target on NVIDIA is between 495 and 500 to start, but we do expect the stock to continue moving its way towards 1,000 at some point, and we do expect the stock to split. We have seen this story countless times with strong stocks that are leaders of their industry, especially in an industry that has so much hype around it like AI, where these stocks will have a tremendous valuation, and yes, it would be extremely overvalued, but the stock will nonetheless continue rallying until it eventually splits, and then we see a correction. So we are still very much bullish on NVIDIA, and we are bullish for the stock to move towards 500 in the next week or so. However, keep in mind that we are still in very much earnings season, and earnings can really move us up or down. So if you see a bad reaction from Apple and it drags the market down, you also have to look at the downside. So NVIDIA to the downside is still very much bullish as long as it holds above 440. If it moves below that level, then the stock can break below 432, and then it would enter what would be considered a short-term bearish zone. So below 432, the stock re-enters this consolidation zone. Obviously, it took NVIDIA weeks to get out of this zone, and it finally broke out and has been consolidating above that 440. So if it moves back below it, these buyers are not going to be happy, and they're likely going to sell it off towards 413 and even 400. Now, in terms of the next stock on our watch list, which is going to be Apple. Now, Apple, like SPY and many other stocks on the market, is still trading strongly above its 10 and 20-day moving averages. But if you have been an investor or a trader in Apple recently, you're not quite very happy because Apple hasn't really moved much up or down over the last several months. So buyers or sellers are looking for a very big move on these earnings that are happening this week. Now, Apple is catching a break because these earnings actually have very low expectations. You can see these earnings have lower expectations than most of their previous quarters, and every time Apple does beat earnings, except for that one time it slipped slightly in Q4 of 2022, but the stock nonetheless continued rallying. So these earnings, they're not expecting much. You can see that estimated earnings per share are only $1.19, which is far less than what they came in last quarter. Now, given the fact that it's Q2, Apple generally has its stronger quarters towards the end of the year, but we do still expect to see Apple meeting earnings without a problem, especially when earnings are these low. Now, if you are bullish on Apple or bearish on Apple, it doesn't matter. We do not know what stocks will do on earnings days. So sometimes the CEO can say one thing wrong and the stock will slip even when they report really good numbers. But at the end of the day, numbers are still exactly what we look at. So if you're seeing a news headline, take it with a grain of salt, because news, they have their own agenda. They're trying to sell what the story that they want to sell is. So make sure that you read into these reports, you look at numbers, you see if a stock beats earnings by a lot, and then it's worth buying. That's what you want to look at. You want to look at for worthy buys that have strong earnings that are improving quarter over quarter, and you're not just reading a headline that's selling you an agenda. Now for Apple's levels, obviously the stock is still very strongly bullish above the 10 and 20-day moving averages, but you still want to pay attention to the intraday levels. Here on the hourly chart, you can see that Apple is strongly bullish above 194. So if you are looking at the intraday charts, you want to place a support at 194. As long as it's above that level, the stock is still in healthy consolidation, and it can move to retest 197.20 and even 198.23. So this resistance here marks the all-time highs for Apple. Above that level, we do expect the stock to easily move above 200, and when the stock is finally above 200, we actually don't expect it to come down for quite some time. And if it does, of course, we have a downside plan of action. To the downside, we can see a break below 191.20 on poor earnings, or maybe just a poor market downturn. A move below that level has a downside price target of 189.60 and a second price target of 188.45. Now, if Apple moves below 188.45, it means that it's now below the 10 and 20-day moving averages, which is something that it hasn't done since back in April. And both those times when it moved below those levels, you can see that it quickly got bought back up. But if it moves below it this time, then the stock may be trying or attempting to retest this 50-day moving average before it continues higher. Now, the next stock on our watch list is going to be AMD. AMD has earnings this week, and you can see that AMD has struggled for the most part on its daily chart. So this is one of the only stocks that's trading below the 10, 20, and 50-day moving averages, unlike most other stocks on the market right now. So let's talk about AMD's short-term levels. So for AMD's short-term levels, first, we have the biggest breakout set at 122.12, and the reason we got to that number is because this is the most recent high that AMD saw and got rejected at. So you can see AMD suffered from a 2 back-to-back resistance rejections here, and then the stock got sold off, which is considered a double top pattern. So the stock will need to go above that level for buyers to regain confidence and move it towards its next price target of 124 to 126. Now to the bottom side, if you are bearish on AMD, you will need a move below 108.55, which is its most recent low. And below that level, it can move to the downside price targets of 107 and 105.50. Now AMD has been quiet for some time now, which means there could be a big earnings move brewing, but we just don't know if it's going to be up or down, which is why we always like to wait for the earnings to happen, and then we play our strategy on the earnings after they take place, depending on the numbers. Next stock on our watches is going to be Tesla. Now, Tesla has been quiet for some time as well, and that's because they had a poor earnings reaction. But you can see that if earnings were that severe and sellers were very active, Tesla would have sold off already. The fact that it's actually still holding here means that buyers are likely active once again. And we know this because when we look back at Tesla, we can see there was buying accumulation at the very same place. So when you're looking at supports and resistance points, you want to see a lot of movement at those supports, because if there was a lot of days spent at those supports, it means a lot of buying got accumulated. And in this case, this is exactly why Tesla is still holding above that 250 mark, and it's trying to climb its way back above the 10 and 20-day moving averages. Now, this doesn't mean that Tesla is necessarily going to hold and it's not going to sell off, but that's just the general consensus of what we're seeing so far. Here's some levels to focus on for Tesla. If you are bullish on the stock, you need the stock to move back above 285, which will place the stock back above its 10 and 20-day moving averages, and it would start filling in that gap up. Above 285, buyers can finally be comfortable again, and they can take the stock back to retest that 300 rejection, which happened right here, right before earnings. So the stock needs to break above that level for it to continue its rally towards 314 to 315, but that is a very aggressive price target. We do not expect that to happen this week. So you want to really focus on the 273 breakout here, the 285 breakout, and maybe we move closer to 290, but we don't expect Tesla to move to 300 this week. To the downside, we can see Tesla breaking below 253.60 if the market got weaker, and below that level, the stock can start declining towards 240 to 242, which is an aggressive downside price target. The next stock on our watches is going to be Google. Now pay attention to what we told you earlier in this video, the power earnings gap strategy. It's a strategy in our course. If you want to learn more about it, make sure you check out the link to our course below. The power earnings gap strategy is one of the most effective strategies on the market, and here in this case, Google is one big strong contender for that strategy, but we need the stock to continue proving itself at these highs before we can fully purchase or get into this stock for a short-term trade or even a position trade. So here in this case, we see Google gapped up on earnings, and it was a beautiful gap up on the weekly chart, very strong buying volume. The stock is clearly breaking out of a bullish flag, but it needs to continue holding that bullish flag going into the next few weeks. The first and foremost, most strong support to focus on is going to be at 128.30. This is the bottom of the consolidation on the breakout. So you can see this is the lowest point that Google moved to before bouncing up and pushing. So we need Google to stay above that point. It's not too hard to ask. And if it moves below it, we're going to give it a little bit of breathing room, because sometimes market makers or institutional buyers, they want the liquidity, so they will force a stock just below a support and then they will buy it back up. So here in this case, as long as Google is generally holding above that 28.30, we are still very bullish on the stock. The next resistance to break out above is 133.75, and then the second price target above that is going to be 137. Above 137, we have a very aggressive price target of around 145. Now, Google is a stock that is doing so well fundamentally that it would be a shame to just take profits around 137. This is a stock that we would consider for a multi-week or a multi-month position trade, and this is our specialty in our Hyper Wealth group, which we will leave a link down below in the description for you guys. So if you are bullish on Google, those are your levels. If you are bearish on the stock and you think the stock will come back down, you would need a move below 128.30 with strong selling volume, and the downside price target would be around 120 to start. Below 120, Google can retest the 115 support, which is a very, very critical support. Last but not least, the final stock on our watches is going to be Amazon. Amazon is also reporting earnings this week, and Amazon has a bit of a more aggressive analyst target or analyst projections than Apple does. You can see that analysts are expecting a very big quarter from Amazon. This is stronger than all 4 previous quarters, given the fact that Prime Day happened this quarter, but nonetheless, this is a very strong expectation, and if Amazon can beat expectations or come in line, that means Amazon is likely to have a very strong positive reaction that continues rallying for days, even weeks. So let's talk about Amazon on the daily chart, and then we'll talk about it on the hourly chart. Amazon broke below its 10 and 20-day moving averages last week, but you can see that it came down to the 50-day moving average and buyers were quick to buy it up. So this is great news for the company. It means that they got held above their 50-day moving average, and now that becomes a major support. If you're looking at Amazon on the shorter term candles, let's talk about some levels. Here we have Amazon's first resistance registered at 136.65. This is very simple. We got that from the highest point it reached recently before seeing the strong rejection down. So if Amazon can break above that level, we do expect it to move to its first price target of around 141. Above 141, the second price target would be around 147. If you are bearish on the stock, you first needed to move below 123.80 for it to see a first downside price target of around 119. Now, if it moves below that level, then it will be placed below its 50-day moving average. And if the stock moves below its 50-day moving average, it's not a good sign, because stocks below their 50-day moving average are typically seen as in a bearish short-term trend or even in a bearish long-term trend. So you can see that when Amazon broke its 50-day moving average here, it sold off for months. But keep in mind that was during a bear market, but that just goes to show how strong that 50-day moving average is. Alright you guys, so I hope you guys found this video helpful. Don't forget to subscribe and like, and please be careful, it is earnings week, so you want to make sure you're positioning and giving yourself a lot of times, especially if you are trading options. Thank you so much and best of luck.